Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, March 1st. Okay, let's do a quick recap of what happened last week before we dive into the charts. We saw last week pretty volatile as far as both equities and bonds. I think bonds were driving most of the action. We had discussed several times the spiking 10-year bond yields. We went from just below 1.4%, and we spiked up all the way to 1.61% Thursday afternoon when there was a very poor 7-year bond auction. Now that backed off on Thursday afternoon and then on Friday to close down around 150. Now this morning I see that TLT is down about $2. So I did not look at the yields, but that tells me yields are back up a little bit here this morning with yields up and TLT prices down. And like I said last week, we had several days with either big gap downs followed by them buying it up. We had that happen several days. I think a couple days were over 4% intraday moves. And it looks like we're set up this week to pick up right where we left off. It's 6:30 as I'm starting the video. S&P futures up 1%. NASDAQ futures up 1.2%. And small cap futures up 2%. Yeah. Copper up 1%, silver up 2%, and I mentioned that bond prices were down. So, when we're talking about getting ready for our trading day, when you see the pre-market be up so boldly, 1% or better, the one thing that I think needs to come to the top of your mind is watch for that opening fade of that, to fill that opening gap. We saw that a couple times last week where the opening gaps were filled pretty shortly after the open. Some of those were down gaps where they bought it up, but then there was other times where they were large gaps to the upside that they faded back down the other way. So don't get sucked in, in the first 15 minutes thinking like, oh my God, we're off to the races. Let that first 15-minute, 30-minute opening range develop. Then you'll have some good levels to shoot against, because I'm always wary when, especially with the recent volatility, that when you've got, a 1% open higher, that gap will just be too enticing for the algorithms or whoever not to sell into that and bring it down to close that gap. So be ready for that this morning. Either way, we'll see what develops. So let's get into the charts and see what we can find out about where we stand heading into March. Here's the SPY daily. You can see here that we've had a solid test of the 50 EMA down here at 379, and it has held so far, but you'll also notice that price is below the 8 and 21 day, and also below this what I consider a solid pivot level at 385. And just looking quickly at the charts this morning, the live charts, even with the 1% boost from the Friday close, we're still below that 385 in the pre-market. So I think that 385 is going to serve us pretty well as a go or no-go level, or a bull-bear pivot level for this first part of the week here. Now, given that we're below the 8 and 20 on price and below that pivot, I think we still have to be very, very tactical with our positioning and our outlook, because uh, just on the face of it, that's a bearish setup. You can see that the RSI has broken below trend. We've got a PPO bear cross working and really not showing any signs of curling up yet. So I think we got to be pretty tactical here. And certainly, if in the days ahead, if we were to lose the 50 at any point, a daily close below the 50, then that's going to open up more downside pressure. Here it is on the 2 hour. You can see this was the dump into the Friday close, and now they've rallied it in the pre-market just here below this 385. I think that's a good level that if price were to clear 385, you can use that to be long against if they decide to just gun it all day. But also if you see that 385, if you see price stalling there, I think that would be a decent place for a tactical short with a stop just above, and then you'd be playing for a simple gap fill lower back to the Friday close down around 380. That's a nice $4.50 trade to start off your week. And so just keep that scenario in mind. Here's the 30-minute chart. Not a lot different. Just exploded. Just keep in mind that we do have this open gap down here. I had it spelled out, I believe. Yeah, 379.65 to 376.23. So there's this open gap here. I don't want to get too predictive on where price is going. We just got to go from level to level. But the top of the gap has been penetrated once, and I think if price came down again and got into the gap, I tend to favor a gap fill. Go ahead and fill that gap and then find support and then bounce back up. But like I said, that's all conjecture. That's nothing to trade off of. I would just say, if you're up here and they fill that gap and then they come down here to 380, then your first area of interest after that gap is filled is, do they come down here to this prior gap at 379.65, and if they go inside, then your natural target would be 376 to fill this gap. Moving on to the Qs, you can see here on the daily, prices below all the fast moving averages. I mean, the 8, 20, and the 50 prices below. I mean, that's a bearish setup. Now that doesn't mean that price can't find support here at this gap, and then with the 1% open here, just pop it up and go. But I don't think you can just jump to that conclusion. I think you got to be very tactical here. The FATMAAN names we're going to go over in a minute, but they've been pretty weak. So until you start seeing those big mega cap tech names start to run, it's going to be really tough for QQQ to hold its ground with all that market cap. The top 6 or 7 names, stuck in the weeds. So I think to start getting a better feeling for the Qs is to see price recapture 321. That would put price above the 50, and back up above this little pivot, and then you want to see price recapture the 8 and 20 day to really say, okay, now price is above all the moving averages. Then you start to see the averages start to turn up, and then back on an upward cycle. But until that happens, I think you got to be very cautious here on the technology space. Here's the 2 hour. Notice we've dropped down below the 50 on RSI. We've been there for several days. That's in bearish mode. And look at the PPO as well. We've dropped below the zero line into bearish territory. And notice here, stayed above the whole time, and just now recently have dropped below with this pullback. So use 321 or so as your upper pivot, and then on the downside, I think 313 here with this large volume over price bar, that should serve as downside support. You can see that with support here, support here, support here, 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 here. So there's been a lot of times where this 313 has been tagged. So if price breaks below, the next level you got to be focused in on is the top of the gap. And you can see here, actually again going all the way back here, these long wicks or shadows that come down. There's almost a tag here, perfect tag. I mean, I call this basically a tag here, here, and here. So price has reached down to this gap several times. So I think if you lose 313, you're coming down here to 310 to test the top of that gap. And notice it's pretty wide. It's $3. So that would bring you all the way down into the 307s should that fail. And, here's a 30-minute chart that, just has it exploded a little bit. We're set to open up here around 320. But like I said, with that big open gap, anything can happen on the open. IWM, while not perfect, has held up a lot better than the other indexes, mostly because it holds the financials and all the reopening names, the value names. And I think as money has moved out of technology, it is finding the IWM names. You can see here that although price is below the 8 and 20, it has been able to hold this 217.50 pivot. So as long as that pivot holds, I think the chart remains fairly constructive. But if that were to fail at any point, then I think you're coming down here to 210 to test the 50. And that would be certainly something where even if you weren't an active, super active trader, if you saw a daily close below 217.50, I think you'd want to put on at least a tactical short targeting 210, even if it's just as a hedge to protect whatever long positions you may have in IWM names, value names. You can see here on the 2-hour chart, at least on this level here, how 218 has held it. Even though there were some deep plunges on a couple days last week, they bought it up right up to this 218 level. So yeah, I mean, I think you can stay long above that 217.50 level. And here, again, just more exploded view. Gentle pullback, but we're up 2% in the pre-market. So we're going to be up in the, the low 220s, 222, 223 for the open. So of the three indexes, I think it's pretty clear that IWM is the strongest. And even if there's a green day today, I think you'll see IWM handily outperform the other indexes. So if you're actively trading and you want to take a shot on the long side, I would be trying to take a shot on IWM versus the Qs or even SPY. I think you'll see some outperformance there. Okay, moving into the FATMAAN names, which we've alluded to earlier in the video. Really weak. You can see here Facebook. This 266 level has capped all the rally attempts, and this 255 has been support here, was here and here. So while there are intermediate levels, I think your pivot here is 260. If you cleared 260, I think you can look for 263 and then 265 and then 266. But below 260, I think price is vulnerable to a pullback to 254. And then, if that were to fail, then back here to 250, and make sure that you have this big gap between 245 and 235 marked on your chart. If things get ugly, that would be, a technical target where, price would want to go if there's some kind of a big down move. But use 260 today if you're an active trader. Price is going to have to get above 266, I think, before it can really, get some legs going to the upside if it decides to do that. Apple remains very weak, even when a lot of the other names were rallying. Apple really hasn't participated in those, big intraday rallies like the other names. And I think here 123 remains your active pivot. If it can clear 123, I think it can find 127 on the upside. But until it does that, you got to be looking down here at 121 or 120.50 for support. And if it were to break below that, then I think you're coming back here to retest this 118 level down below. So that would be a name. I haven't looked at what it's doing pre-market, but that might be a name where they would want to fill that opening gap if it's gapped up higher a few dollars, just because it's been so weak. People that are in the name might want to say, hey man, there's a free $2 or $3 for me right there on that gap, and that'll give me a chance to get out if they feel like they're trapped in here. So I think 123 is your pivot on the upside, and 120.50 on the downside. I think in between that is a bunch of chop. Tesla managed to hold it together at the end of last week. Managed to hold the line here at 675. I think that's your pivot today and going forward for the next couple of days. As long as it can hold 675, I think there's an opportunity for it to bounce up into the 700. If it can take out 700, then 735. But if it were to fall below, I think it's going to come back into 650 for starters, and possibly all the way back into 620 for a retest of this low that we saw back in the middle of last week. So, and I think this is one to watch for both the EV space and just technology sentiment in general. We know that the ARK funds are loaded to the gills with Tesla. And so, I think it's become a bellwether and a barometer for a lot of, the NEOs and the EV names and the battery names like that. So even if you're not trading it, I think it's one to keep on your board as a sentiment indicator. So, but anyways, I think 675 is your active pivot. Moving on to Microsoft, we can see here that after the initial drop from, the 240, let's just call it between 242 and 244, it was never able to get above 244 and hold it. After it gapped down, you can see that it has been consolidating between 230 and 235, where 235 has capped all the advances. So today, if price can pop above 235 and hold it, I think you can get a run up to 238 with this open gap, and then above 238, then you would favor a gap fill. But below 235, I think is it'll remain choppy in this range between 235 and 230. And if it were to break below, if things got ugly, then I think 226 comes into focus if it were to lose 230. Amazon, just like all the other names, have been soggy, and these $50 increment levels continue to work really, really well. And I would use 3,100 today as your active pivot level, as long as price can break above 3,100 and hold it, then I think you've got an opportunity for 3,150. But if it can't, then I think these levels here of 3060, 3050, 3040 right in here would be natural places for price to try and find support in that area. So I would be focused on 3,100 and then $50 above and $50 below as your targets on that pivot. But continue to use the $50 increments. They've been working really well. Google didn't do much of anything on Friday. We have been discussing this big gap that is yet to be filled. Price has come down to this 2,000 level at least a couple times here and found support. I think between this 2,000 level and this 2040 level, you might see a lot of chop. I think if price can break above this gap level at 2040, the longs would have a chance to run it back up towards 2075. But anything below 2040, I think this thing is vulnerable to the downside. And like we've been discussing, if things get ugly, there is no support over here. You're in a big void because of this gap. So if price were to lose 2,000, then I think you got a run down here to 1930, 1920 at the bottom of that gap, and that would certainly be a level. Even if I wasn't some super duper active Google trader, I think if you set an alarm at 2,000 and you got that alarm, at any point in the future, I think that's a high probability trade that you can put a multi-day swing trade on and look for that gap to fill over time. I think that would be a nice trade to be in. Netflix looking a little better than the average FATMAAN name, but still not setting the world on fire by any means. We had the move down had a nice bounce on this flag. Where we were seeing if that could break out and give us a measured move up to 570. Didn't see that. But we can see from the price action that this 554 is definitely an upper resistance level. 545 looks to me as the active pivot to the high side, and 535 is a pivot to the low side. I think in between 535 and 545 is nothing, just a chop zone. So today, if price can get above 545 and hold it, I think you've got a long chance. And on the low side, 530, 534, 535 is your pivot here. On this side, a break below favors lower, a hold favors a move back up. If you weren't a super active trader in Netflix, I would place your alarm here at 554. And if you got that long trigger, I think you could put on a nice long swing trade and look for 570. I think that would be a move that would be a good opportunity to try and capture, because then you'll have all of this below as support. And on the downside, I would either alarm 535 or 525. If 525 can't hold, then you're coming way back into the low 500s for sure. So for swing levels, I would alarm 554 and 525 down here at the bottom of this gap, since this was a level that has held at least 2 times in the past. If it doesn't hold this third time, at 524, then we have other gaps to fill down below, and I think price would be heading lower. So, okay, let's do a little recap before we close the video. I think bond market is still going to be a driver. The skittishness last week, the high volatility range in 10-year yields between 140 and 161 could be a determining factor here this week again. If they take off, I think if they stabilize at even at like 150, I think the equities are just looking for stability and not that wild gyrating yield range. So I think if bond yields can settle down a little bit, I think some of the volatility in equities are going to settle down as well. Keep in mind this morning with the gap higher, there's more than decent odds that they try to jump lower just to fill that gap on a technical move. And if you got that move, down towards Friday's close, then that might be a good place to flip long and see if that level can hold, and then you can be long throughout the day after that opening gap has filled. Keep in mind that the money seems to be still flowing out of tech, out of the Qs, into the value names, cyclical names, financial names that are held in the IWM. I would expect IWM to outperform even if it's a red day. If you saw Qs down 2%, I think you'd see IWM down 1% or 0.75%. I think you're going to see relative outperformance in the small caps. So if you're looking for an index to play on the long side, I would be playing IWM and not the other two indexes. Let's see what else. Watch Tesla for a sentiment barometer for the EV space and electrical vehicle space, all that kind of stuff. Sentiment gauge for tech. You want to see Tesla stabilize and not sell off. If you start to see Tesla fall apart, I can imagine that the rest of FATMAAN names would be pretty weak. And if you're following tech, what you want to see is those mega cap names start to have some price action, a little bit more productive, a little bit more bullish looking than they have for the last several weeks, where they've either treaded water or moved to the downside as money has come out, as interest rates have risen. So, that rising interest rate environment is not great for technology. Now, on the earnings front, you can look on the calendar on the blog site. You'll see we've got quite a number of bubble names reporting this week. Zoom, and I took a glance, and there was several names, really high valuations, not making any money. It'll be interesting to see how their earnings are reacted to, and I think that'll also give us kind of a sentiment gauge on how to look at the balance of this week and beyond. So, okay, if you found the information helpful and the levels, why not hit the subscribe button and the alarm bell, and you'll get this information delivered to you each and every day when I publish content. Also, check over in the show notes for links to the blog site and how to register for all my content. That way, morning, noon, or night, whenever I send out content, you'll get a nice email right to your inbox. You won't have to go looking for it, and you won't miss a beat. So we'd love to have you be part of the community. And also, if you do that, I'll send you a link to our trading room that remains vibrant and full of energy, with aspiring traders helping each other with ideas and all sorts of companionship as we try to tackle these markets together. It's always a good thing to have other folks that you trust and can lean on when times are good, and also when times get a little bit turbulent. We've got a nice community started, and we'd love to have you be a part of it. So I encourage you to join up. So have a good start to March. Have a good start to the trading week. And let's wrap it up here. This has been Chris Buss with Traders Profit Compass. Talk to you next time.